Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the course of this week, the Australian dollar has struggled to retain any bullish sentiment. After a brief test to the upside, the market got close to that key level of 71.70, which is where the down channel comes in, and failed to take it out or even get a close above there. Instead was rejected and now poses a further threat back towards the bottom side of the range, seen around 70.60, with 62 being the low. In light of the pattern, although the ADX is well over its highs around that overheated level of 60, and also we're still oversold and a little bit of bullish divergence when it comes to the MACD, is I'm not holding a bearish level or view here to the fact that we could see a market drop towards either 70.10 to around 70.50 or 60 and then stage a rebound. In light of that, we could see the market eventually take the challenge back to the upside. And if we get a break above that 71.15.25 area, we could see a correction back towards 72 cents. The market is a little bit on the uncertainty when it comes to the euro, with the dollar index, which measures the greenback strength against a basket of 6 major currencies, recapturing that 96 handle, and is currently around 96.11. The euro, since that bullish outside range day, failed to get any confirmation to clearing that top side to claim that 114 area, but instead the market is breaking or backing away, and therefore looking at the RSI nearly close to a negative call, and that is could see the market fall back to the recent lows. With the non-farm payrolls expected to be a little bit stronger, around 550,000 added jobs for November, the market could see the US dollar strengthen up towards that 96.5, with still risk of 97 to 98 as a broader target. This in terms will see the euro drop down to around 110.70.90. The dollar yen, well, since the sharp rejection this week of around late last week, early this week of around 115, the market has still maintained its focus on that key level of 112.65. As you note from this level, that if we get a break or close under there from New York, would expose a region of 110.70. But the technicals are a little bit firmer. You may see a small rebound up towards that top side, where the break was around 113.5 to 113.90. Sterling also posted a spinning bottom, and the market is actually getting a little bit uncertain to where it is. With eyes looking this month, that is, on the Bank of England with a potential rate hike, we could see a recovery. I feel from the divergence and also from the RSI and the MACD looking relatively in a position to post firmer case. Could see the market reject where we are and look back up towards the top side, anywhere towards this region of 135 as a broader target. However, we see the close under 132.80 from New York. Could see further risk to the downside to 131.70. Looking at dollar, looking at CAD yen, that is, the market is attempting to recover, but over the last 5 trading days at least, the market has been negative, or close if you can include this large candle. We could still see a test down towards 87.20 and reassess. We nearly claimed the target around 1,757.64 for gold, and still a little bit mixed here because there is divergence coming back into play, and therefore still could see these recent stabs towards that high 1,800 to 1,815, but has failed and may continue to. I think this could be a little bit of a false signal here. The risk overall still maintains towards that 1,757, and a close under there would expose a region of 1,722 to 25. Wrapping up with oil, well, what an impressive candle that is, coming through as a strong hammer. A little bit more confirmation to support this candle, and a close above 68.50 to 68.60, say, and that would see the rise up towards 73.5 as an objective. Keep an eye on this pattern here, because if we can get a break above the midway point, but do note it did fail. But reaching its objective, that it is around 61.80 to 62, which is where these lows were back in August. We could see this eventuate into more of a bullish stance due to this candle. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day and a great start to the new weekend. And keep an eye on those non-farm payrolls numbers that come out at 12:30 Sydney time or 8:30 New York.